Good evening, everyone, and welcome to Dividend Stock Talk. This is James, your host. Today we're talking about investing in dividend stock for weekly and monthly cash flow. It is 11:05 p.m. April 3rd, Tuesday, April 3rd, which means it is the second day of the second quarter. So how did you do in the first quarter? Now we're trading several different accounts, and we're looking for weekly and monthly cash flow. Now we have different strategies to obtain those, and we use dividend stocks because they have more stability and they're more, for lack of a better word, stable. So it's easier for us to do the trades to get the small amounts that we're looking for on a consistent basis. Now one account we're looking to get 1% per month. Granted, 1% is not a lot of money, but you add it up over the year, and it comes around 12 to 15% because you got compound interest working for you. And sometimes you make a little bit more than you thought you were going to make. Other times you make a little bit less. But goal for monthly cash flow is 1% per month. Now, on our weekly cash flow, we're looking to get 1% per week. Granted, 1% doesn't sound like much, but there's 52 weeks in a year. Added up, it comes to around 60 to 70% per year. Now, why do I say 60 to 70%, not 52? Because there are 52 weeks in the year, but compound interest again, because the money you make in January, the 4 weeks you have in January, the 4 weeks you got in February, or 4 weeks, or whatever, they compound over the year. So you're making money on top of the money that you made, on top of the money that you made. So it compounds. If you haven't figured out how that works yet, we have two really cool calculators that we invented. One is a weekly compound calculator. The other one's a monthly compound calculator. Gives you a good idea how the numbers actually work in that manner. All right. All that being said, let's jump on in and see what will happen. Now, like I said before, we're trading two accounts actively, one for monthly and one for weekly, and we did a lot of trades today. I just want to go through and explain them a little bit. Now on this account here, this is our monthly cash flow one. This is one we're looking for to get 1% per month. Now we got these three here, I believe, back in January. Let's quickly go over them and see exactly when we actually bought them. All right, this one we bought January 8th, and here we are into April, and we still own them. Can you believe that? We collected the dividends, which allowed us to capture more stocks. So instead of having, what did we start out with? Whoops. Here we go, back here. We got 603 of these shares. We got them at $84. And then we got more. I got 3 more shares for our dividends. Now, this week, what we did with AD&T is we sold options against them so that someone can now buy them from us at 65, even though we bought them for a higher price. Where were we? We bought them at 84. The stock right now is at 61. So why are we looking to sell them why did we sell the option for someone to buy them from us at 65? Well, it's simple enough. It's cash flow. It's another 55 cents per share. So we already collected the dividend, which I don't quite remember what it was. And guess what? 90 days later, we're going to collect the dividends again. And we collected the 55 cent per share premium if the stock stays below 65, which it doesn't look like it's going to go. 65 is way up here. It doesn't look like it's going to hit 65. So but basically what we're doing, we're just collecting premiums on a price that we don't think it's going to get to. But if it does, you win some, you lose some. But, now this is the big but. This company here only has monthly options. So there's more risk of losing money with monthly options than it is with weekly options. Because weekly options, the stock doesn't move that fast because they're dividend stocks. They don't have a tendency to move that quickly. But weekly allows you to get more cash flow than the monthly ones. And the monthly ones, we got like 3 weeks. No, wait a minute. Now where are we? To be exact, okay, We're in week number 1 of April. So we got 3 weeks. We have until April 20th before this option expires. So as long as the stock stays below 65 on 4 o'clock on the 20th of April, we're going to collect that premium and say thank you very much, and then also going to collect the dividend also. So we get the dividend and we get the premium. So it's like, thank you very much. Now AZZ, basically the exact same thing, where we view the trades for AZZ. We bought 1,000 shares at 47. We collected 4 additional shares as the as the dividend. So we actually collected the dividend back in February, because we got these at the end of January. So the beginning of February we collected more. We collected the dividends, and then we sold them options against it back in February or March, and now we're collecting more option premiums for the stock at 45. See the strike price here at 45, and the stock right now is at 47. So let's pull up AZZ right here. Okay, so AZZ started out the year at 58 at a high of 61, and slowly been going down until she hit the 47, 48 area, and she went sideways for about 7 or 8 months. Came down a little bit further, found the low of the year around 39, and she seems to be going sideways in the 40 to 44 area. So she's at 42 today. She closed at 42.70 today, and we sold somebody the right to buy it from us at 45. Now 45 is way up here. Can it hit 45? Yeah, it can. But is it going to hit 45 by the 20th? That's 3 weeks. Can it hit back up here? Yeah, sure it can. But is it going to? Don't know. So we collected dividend twice on this, and we sold options twice on this. So if we sell it for exactly what we paid for it, we're way ahead of the game. Last but not least, SLB. Let's put SLB in there. SLB. Schlumberger. Okay, we bought Schlumberger at 79, and we bought it again at 75. So our dollar cost average on Schlumberger is 76.89. Now, we collected we bought this at the end of January, and in the beginning of February we collected dividends on that, which equaled up to 9 extra shares. Was that almost $600? This week we sold we sold the calls for someone to buy it from us at 66, and right now it's at 64. Is it going to hit 66? I don't know. Let's take a quick look. It started out right about the high of the year. Started the year out 80.93. That's the high of the year. Now it took about 4 months to reach a trading range of 65, and it traded sideways for around the 65 area. Actually, the low of the year is 61 to 68. That stretch right there, going from was that the middle of June all the way to January. Then in January she spiked back up to 81 or 80, and now she's settling back into the 64 area. So this is where she is now. So as long as this thing stays at 65 or lower, sorry, SLB right here, 66 or under, we're going to continue to keep the stock until it actually hits our exit price. Exit price is what we paid for it, because we want to collect the dividends and we want to collect the premiums from the options. So that's where we are with that. It doesn't look like we're doing that good because it shows us as a negative 24, but if you add the losses back in and get us back to 0, we're way ahead of the game. Doesn't look like it, but don't panic. Don't sell at a loss. Continue watching it. Sell off some premiums in order to gain more cash flow. Because remember, we're collecting the dividends every 90 days, and every 90 days we're also every 30 days we're collecting option premiums. But we're going far enough out in the option premiums where we're not going to be called out, and we're not also going to lose. So we don't want to just hold it and not collect anything. We want to collect something. It's not the greatest in the world, But as you can see, we profited $2,400 today alone just on the option premiums. Okay, so let's get to the other account where we go for weekly cash flow. Now this account, we were doing really great for the first couple of weeks. We were up in the 20% area. So we had 20% after like 2 months. And then March hit and everything went down. So we lost all of our profits from the first 2 months and the third month. But now we're back up to the 19% return. Now 19% doesn't sound that great, but for the first quarter, 19% for the first quarter. So we got 4 quarters in the year. So if we're doing 19% in the first quarter, we could hypothetically hit 75 to 80% for the year. But let's not get ahead of ourselves. Now, a few things we did today. We bought CVS, APA, ZTS, and CL. So let's take a look at what we're looking at. Okay? APA. You want to view the trade. We have April 6th, which is the 6th day, which is 3 days away, which is this Friday. APA, we got that one at 40 cents. Okay, so as long as this, let's pull it up here. Pull up the chart for APA, and it looks as if it closed at 38. Okay, APA, or Apache, started out the year at a high of 54. Okay, it traded for a couple of months in the 47, 46, 47 area. Dropped down to a trading range of 39 to 45. That's $6 area right there. For it looks like 5 or 6 months. Finds the low of the year in the beginning of March at 33. Now this thing was at a high of 54. So that's almost a 50% cut in a year. Okay, so she bounces off the low of the year, 33, and she's settling in right at the $38 area right at this moment in time. Now we have the 36, 36 and a half. What does that mean? Now we paid 40 cents for it. So the most we're going to make out of this is just 10 cents. But 10 cents on 5,000 shares, that adds up, my friends. Okay? So as long as APA stays above the 36 and a half, we will make our 25% return. Because you're buying it at 40 cents and we're selling it at 50. That is a 25% return. I don't figure how they figure that one out, but it is. It's 25% return. And that's pretty nice. And is it going to go down to 36? It could, but is it going to? I don't know. Guess the dividend coming up in 10 days, and the trend for the last month is on the uprise. Even the seasonality on this. Let's pull up the seasonality real quick. All right, seasonality. Let's go see all of it. Click on this little minus. Here's the seasonality. Apache seems to be going. It's a sideways company. You know, 10 year. This is the red is 10 years worth of data. So I think it looks like it starts in January, and it just goes sideways for the whole year, and it dips in December. Okay, that's just, you know, the way it is. So where are we now? We're here at the blue line. This is this current year. This is 2018. Okay, here we are here. And if you look at the red line is, like I said, 10 years worth of data. What is this thing going to be doing for the next couple of weeks? It's going to be going up. So seasonality tells you over the last 10 years that this thing does this. Is it going to continue? Don't know. But the odds and probabilities are good. You got the dividend coming up, and the regular chart shows we're way above where we need to be. So if the stock goes up, we make our 25%. Wait a minute, where are we at? We're looking at APA. Yeah. So we're looking to make 25% on this trade by Friday. So that's only like 3 days away. Okay, so 25% for 3 days is not bad. If the stock goes up, we make our 25%. If the stock stays right where it is, means it goes absolutely nowhere, we still make our 25%. This stock can even go down from where it is right down to $36.50, which is right here. And we will still make our 25% return. That's why I like debit spreads. Because the stock goes up, we make money. Stock goes down, we make money. And the stock stays the same, we make money. There you have it. Does it work all the time? No, it doesn't. But it does allow me to get 1 to 2% per week. And that's my goal. My goal for you guys is to get 1% per week using this strategy. 1% per week. That's not that bad. All right, the next one, CL, Colgate-Palmolive. This company's been around for over 100 years. It's a Dividend King. What does that mean? That means for 50 years, this thing has been increasing its payments to its shareholders on a yearly basis. Every year they hand out more and more money. Okay, so Colgate started out the year at 73. She's basically going sideways. Now, it looks like it's all over the place, but look at the numbers. 68 low, high 78. That's only a $10 move. It looks a lot more, but it's not. 78 to 68, that's only $10. She started out the year at 73, tried to make a high at 77, didn't make it, came back down, tried to hit a low at 68. It came back up in the middle of January to actually hit the high of the year of 77.93, which is almost 78. And then she dropped from 78 to a trading range of 69. And she travels 69 area for about 2 months. And she's basically going sideways. This is an awesome stock to get into. Several reasons. Number one, Dividend King. Heck, they've been in business for over 100 years. Buy them, hold on to them. Dividend King, they've been increasing their profits to the shareholders every year for a minimum of 50 years. So right there, you can't go wrong. Another kicker, in 10 days, they're going to pay out their dividend. So what does the seasonality show us for Colgate-Palmolive? Let's quickly take a look. Here's where we are. This thing usually starts out low in January. It comes up to sideways market through May, June, July, and August. Takes a little dip in August and then goes back up again to the same area. She's basically going sideways with a couple of little dips. And if you pick it just right, which is where we are now, here we are, look. Right where that blue dot is. That's where we are today. So where's she going for the next couple of weeks? She's going up to this little peak right here. Is this guaranteed? No, sorry, not guaranteed, but it's a high probability. And even if it doesn't work out, we can end up actually buying the stock and just collecting the dividends on it. So let's go back to our standard chart. Here's where we are. And where is our position? Our position is the 69.5, 70. So 69.5 is way down here and 70 is right up here. Okay. You're in an uptrend. Granted, it's not the strongest uptrend. She's kind of like a sideways market, a slight bit of an uptrend in the last couple of weeks. She could go up and come back down again, but as long as she stays above 69.5, we're good to go. And what did we pay for this one? We paid 33. You know what that means? That means that's close to a 35 to 40% return for 4 days. I'm sorry, but that's pretty good. We could even went to 69 to 69.5 and gone for the 25%. But Colgate-Palmolive, I wouldn't mind buying 5,000 shares of it. So, let's move to CVS. CVS is at 62.58. She started out the year right around 77. Goes sideways for about 5 or 6 months. Takes a drop down to 66. Jumps back up to the high of the year, 84. And drops down to the low of the year at 60. Now, as you can see, last couple of months she's in a downtrend. What does that mean for dividend stock? I don't know. Every 90 days, they pay out a dividend. And they're coming up to dividend payment in the next 10 days. What does it sound like? Seasonality? Let's take a quick look. Seasonality, this thing is basically, right here, highlight that, going sideways. Where are we? Right here? Basically just going sideways. Okay. She's basically going sideways. That's pretty great because we don't care where she goes. As long as she stays, where are we? CVS. As long as she stays above 61 by 4 o'clock on Friday. We go back to the standard chart. Okay, she closed at 62.58. 61 is down here. Could it drop below 61 in the next 3 days? Sure it can. It could also go up to 100 in the next 3 or 4 days. Don't know. But at 39 cents, we're looking at about a 26, 27% return. Okay, for 4 days. 3 days. Today's Tuesday, Wednesday, Thursday, Friday. 3 days, as long as it stays where it is, goes up, or comes down just a tiny bit. As long as she stays above 61, we're going to make our 27, 28%. I like that idea. Okay, 3M. 3M, they don't have a dividend coming up. So why did I get into 3M? Well, 3M started out the year at the low of 189, jumped up to 208, went sideways for 3 or 4 months, continued on up to a high of the year at 260, dropped back down to the 230 area, and today she just happens to be at 216. Now, we're looking at the 212.5 and the 215s. So as long as she stays above 215, we're going to make our money. Now, they don't have a dividend coming up, so why did I get into 3M? I'm going to show you in a second. Let's quickly look at seasonality. Anyone in grade school, third grade, fourth grade, fifth grade, can tell you that this is going up. From January, she dips the first week of January, but from January all the way until July, that's a nice upward trend. Okay, so let's take a look. Basically sideways with an upward trend toward. So why are we doing 3M if she doesn't have the dividend coming up? Well, let's go back to our standard chart and I will show you. Go to my account statement. And this tells you all my buy orders. This is what I bought today. And this is my profit and loss year to date. Who's at the top of the list? 3M. Okay? Now, 3M, I made a profit of $2,900 today. Okay, it doesn't tell me a whole lot, but profit and loss for the day is $2,900. However, look at my profit and loss year to date. We're in the second quarter. So the first quarter, I lost $10,000 on 3M. That's a big loss. So why am I on 3M today? I'm trying to offset this loss and trying to erase it. So over the next year, I'll be taking a look at each one of these. And when they hit a prime point, I'm going to try to eliminate these losses. So at the end of the year, I have less losses. It just makes sense. So 3M just happened to be today because it has this nice little upswing at the moment. That's the only reason why I bought 3M today. Not because they have a dividend coming up, which is kind of against what I normally do. Okay, I normally do, just stocks that have dividends coming up. All right, last but not least, ZTS. Okay, we got ZTS, the 8081. So let's see what ZTS looks like. ZTS, so it says 82.87. She started out the year at 52. Quickly came up to a trading range of 62, which is a 20% increase in about 2 months. Goes sideways for about 5 or 6 months. And then in November, slowly went up to find the high of the year at 85. Now that's pretty good to go from 52 to 85. That's a little bit more than a 60% increase in a year, which is good. I mean, wouldn't everyone like to get a 60% increase in a year? Okay. So for the last couple of weeks, she's in this jumbled mess, kind of going down and lots of movements. Look at the distance between the low of the day and the high of the day. That's a lot of movement. But where are we? 80.81, way down here. Look at this. 80 way down here, 81 way up here. Okay, so as long as the stock stays above 81, and where are we with ZTS? 35. 35 is right around a 40% return. So we can look at a 40% return. And this one just so happens to be not this Friday, but the following Friday. So we have to hold on to this one for 2 weeks because apparently this week's ZTS, which I wanted to get this week's, 80.5 to 81 at 40 cents. I just couldn't get it. It stayed at 40 cents, 40.5 cents, and it just wouldn't come down to that 40 because I didn't want to do it for less than 25% return for 3 days. I missed out. Sorry. It might work. It might not. Don't know. So anyway, we missed out on the ZTS for this week, but we had ZTS for next week as long as she stays above 81. So again, let me quickly run over this. If the stock goes up, we make money. If the stock stays the same, we make money. Now, stock can only move 3 different ways, up, down, or sideways. And if you get 2 of them covered right from the bat, you're good to go. That's a 60% return, 60% chance that you're going to be right. Now, the kicker comes in with the down part. If the stock can go down, but just a little bit, we're still going to make our 45%. So, goes up, we make 45%. Stays the same, we make 45%. Even come down just a little bit, we still make our 45%. That's why I like that. And what we have going for us is seasonality, which 10 years worth of data saying it's all going in one direction, and you got a dividend coming up in the next 10 days. Absolute worst case scenario, I collect the dividend, turn around, resell it for the exact same price I got it for, or do a covered call on it. It's a good, strong company, and it's got weekly options, which makes me a happy camper. All that being said, let's quickly look and see if we have any questions. If we don't, we be out of here. No questions. Great. All right, so all that being said, we're doing rather well on our weekly cash flow scenario. Our monthly cash flow scenario doesn't look like we're doing well, but we're doing okay. As long as at the end of the year we're still, we beat the average, then we're good to go. Okay, this is James signing out from Dividend Stock Talk. You guys have a great day, and I will see you the next time we're trading.